Welcome to another great episode of Homeownership Heroes. I'm your host, Bryan Bergjans, and I'm joined by my co-host, Rick Bettencourt. Rick, say hi to everybody.
What's going on, everybody? Good to see y'all.
And we have a special guest, the one, the only, John Bell. John, thanks for joining us today.
Thanks, Bryan. Thanks, Rick. Great to be back with you.
Well, we got the band back together, fellas. And so I don't know how this is going to end up, but I know it should be very entertaining and eventful. Last time I think we did this, we were in a hotel room somewhere at a conference. So we've really stepped our game up.
It always comes out good. We do a great job. You're a good co-host. I'm a good co-host. It's going to be wonderful, man.
Well, hey, I love the intro. I gets you all ready. So
that was very cool. Yes, it's a great intro.
I told you we stepped our game up, All right. So let's get this party started. So, John, I think it would be fair at this point in time for you to give a little bit of your background to the audience. I don't think people know who John Bell really is. So why don't you, tell us about your journey and how you ended up where you're at today.
Thanks, Bryan. So let's start back with, I served Navy. Smarter than some, maybe not most, but I will say that decision alone is what really put me on the path of being in front of you today. Military, then went to school, went to college. Right out of college, started working in financial services. Had a pretty good career, successful career in the private sector, and basically came to VA because I wanted to make a change. And at that particular time, we had a dedicated staff at VA. We still have a dedicated staff at VA that certainly support the mission, but this was the program back then of last resort. So basically, if you were a veteran, you would go try to get a home loan and any other product, and you just happened upon VA because you wanted as little money down, and maybe more than one turned you down, for other options. And we really wanted to, I made it my mission, to make sure that we turn this program around to be veterans' product of choice. And we continue to do that. And so today we're going to talk a whole lot about what are the steps that we have taken throughout the years to make sure that we are meeting that mission. I think that you'll see in the data that you're going to get today and the information that you're going to get today that if nothing else, you'll see just how far this program has gone with the help of course, our lenders and servicers and our external stakeholders out there that are providing the benefit to you. So, with that, let's get into this.
So I want to unpack something real quick because what I do, I unpack. So you came from the private sector into VA, right? Do you think your experience on that side of the fence really helped you when you got to VA on like, hey, I've experienced working with VA over here. I know like how we can make it better for both the lenders and the veterans on this side?
I think it helped and it hurt. So the place where it helped the most is being able to tell the story of what what our lenders, our originators, our servicers out there are experiencing every day. So when I said I was in the private sector, I did pretty much every job imaginable. I led pretty much every team imaginable before I got here. So I did origination, I did portfolio retention, I did servicing, I did property management. I went through all those phases in the private sector, which helped me really understand mortgages collectively as to what the process and the procedures are that take place. Now, on the other hand, where it hurt me is not growing up in the government and knowing how to maneuver, because it is a completely different animal to be able to, switch to policy and, the politics of what needs to happen and who to go to make sure things happen so that I can deliver back to you the way to provide this benefit to our veterans.
That is an important thing that John brings up, because it's the policy piece. I just got to tell you, John, I think you're coming up on almost 2 years now in your current position, maybe a little bit more, almost 2 years, right?
A little more, about 3 years.
Okay. The changes that we've seen since you've come in have been just unbelievable, positive improvements. And what I think a lot of people don't understand is how difficult those changes are, because 98% of the lending community, I can assure you, don't understand that there's law behind the home loan benefit itself. There's actual statute and policy, and it's not like a traditional GSE where Fannie Mae and Freddie Mac, great organizations, can make changes when they see fit, because it's different than what we have. So the fact that you've been able to make all these, given the politics, given the policy requirements, it's just impressive. And I think that's something that's not talked about enough, is what you and your team have done, dealing with the policy piece of it, the laws, the statute, the interpretation, the legal side. So it's just been, I'm very fortunate to have been involved with VA for so many years and learn a little bit about that. And I share that with my partners and my referral partners and my loan officers that I know. I go, guys, listen, this is what it is. They're working on changing it, but they can't change it overnight. There's steps. And that's something that I think needs to be talked about more.
You bring up a good point. When we were all kids, I think, or actually I may be telling my age a little bit, but there was a little thing on PBS called, I'm a Bill, right? And I'm a Bill on Capitol Hill, right? And
I remember that.
You follow that process. It's almost like the same thing when I was in high school. I said, if I ever get through Algebra 2, I'm never going to do algebra again. But what I ended up picking was a profession that literally you do algebra every single day. I mean, the mortgage payment itself is an algebraic equation.
Oh yeah.
And so you never know how things are going to transcend later on in life. As you're learning things and going through, teenage to military or to college or whatever, how that's going to transcend in your future. So it certainly has helped me, and I think that it has allowed us to accomplish some major things, for not only this industry but for our veterans that participate in the program.
When I was growing up, my family would always say if anything was tough to get done, they would always go, it takes an act of Congress. And I don't think people understand when it comes to, VA and stuff, how real that statement really is.
Very real. And I think people need to know that, because they would understand and have a deeper connection with how important this benefit is. And it's protected by law for a reason.
Absolutely. Okay. Well, this is a good segue, John, to talk about some wins and accomplishments, the good stuff that, you guys and your team have done over the years. I mean, obviously, Rick and I know better than anybody that the utilization, while it's not where we want it to be, really, but if you think about it, comparatively speaking to 10 years ago, I mean, like, more people are using the benefit. Awareness is clearly through the roof. You guys have seen production through the roof. I think we're breaking records year over year on loan guarantee. So why don't you share some of that stuff with us?
Yeah, if you were going to tell me 10 years ago that we were going to take a VA program that basically, when I attended my first industry meeting, they forgot to give us a chair in the room. We were less than 1% of the market share.
Wow.
For the VA home loan program. We're now 14% of total mortgage market share in the country of all programs. If you were going to tell us that growth, tell me that growth and how we were going to get there, I would have shared the joke with you, right? I would have. We would have had a good chuckle and talking about what all it would take to do that. And there have been some milestones along the way. A veteran, we used to tell a veteran they had to buy a place that was only worth a certain amount, and they couldn't go over that amount. And if they went, because of high cost limits and those kind of things. So if you went to California or you went to the East Coast and some of the areas like where Rick lives in Boston, and you couldn't use a VA loan in those areas unless you had a lot of money to put down. And if you had a lot of money to put down, what was the cost benefit of using your VA loan? And so you didn't see a whole lot of uptick in using that volume. So now a veteran can buy a property for any amount as long as we can appraise it, and they have the entitlement in which to do it. So that's an exciting change, for the program. Other exciting changes, have been things like when we came out last year with and the NAR settlement and allowing for veterans to compete by removing the inability for them to sign borrower agreements and pay, and pay to be as successful in utilizing the VA program as anywhere else. What we've done with condo eligibility. When I came in, we were issuing eligibility in about 22 business days. We are now issuing eligibility 99.7% of the time in less than 3, over 95% in less than 2, and 77% of the time it's just instantaneous. You hit a button, and automatically you get eligibility. So those are the type of things we needed to compete. Let's take appraisal, for example. I came in, or when I came to VA, we were doing appraisals in about 16 business days. We're now under 7 business days issuing appraisal. So, those are the type of things that allow y'all to compete in the marketplace and really kind of say VA is the best loan product out there. Also, let's just look at the funding fee. So we don't have a mortgage insurance. You pay a funding fee. Right now, your funding fee, we've got over 60% of our borrowers that qualify because they're receiving some type of disability. They're not even paying a funding fee. So you're going to the table with up to 100% down payment, not paying a funding fee, and your interest rate normally is less than what other products are. So it is the best cost option for veterans, bar none, from any other program. And so, those are the things that we are most proud about being able to be a part of and to deliver for y'all to be competitive out there.
So quick question, since we're talking about wins and accomplishments, let's talk about things possibly on the horizon. Before the show kicked off, we were having a conversation around, what are some of the things we can look at that just don't benefit the veteran anymore on how we do VA? Is there anything that jumps out to mind that, some things we could look at to making this a better program?
We're still looking at condo waiver process on how to make it easier for our veterans out there to compete by buying condos. As we all know, the price of single family and real estate in general, it continues to go up. We want to make sure that affordability is something that we're talking about. We're also working on minimum property requirements, how we bring those in line and maybe not be as parental as we have once been. We want to make sure that those decisions are make sense and are transcending across the other loan products, and kind of bring ourselves in line with Fannie and Freddie and other loan products out there. So we're taking a look at that. So yeah, we're continuing to look every day as to how to make this program more competitive, so that veterans are going to be able to continue to take advantage. And we're not stopping at 14% market share either. We want, we want a bigger seat at the table by allowing veterans to compete as much as they can.
Bryan, I think it's important I love the fact that John's used this word twice or three times so far, parental, right? Because a lot of times people say the VA loan is restrictive. It's not restrictive. It's exactly what John just said, it's parental. Why? The VA loan and the benefit itself and the provisions put in place are there to protect the veteran and the veteran's family, whether it's an NPR or whether it's the property condition or the condo, whatever it is. And what do parents do? Parents protect their kin. Parents protect their children, their family, their friends. That's how it is. And so I've never really used the word parental. I had to write it down because that's something I'm incorporating now into my presentations. Just every time we talk to John, we learn something new. It's great. And that is absolutely 100%. And when you look at the parental aspect, as he talks about condos, me being in Boston, I can tell you 100%. There are a lot of veterans in Massachusetts. A lot of veterans come to Massachusetts because of the tech jobs, defense jobs. Boston is one of the top higher education, hospitals, medical, you name it. And what they're doing right now in Boston is taking 8, 9, 10, 12 unit apartment complexes and converting them into condos. Condos make up 30% of my business. I do a lot of condos. I think I did 25 condo approvals last year, just myself. And the fact that they're being less parental in some cases on condos has been a game changer for me. I just love the fact that, just because a condo is denied doesn't necessarily mean the veteran can't buy it. So we have to follow the process and reach out to the RLC or do a SNO. We'll talk about that in a bit. And be like, hey, why was it denied? What's going on? Can we get a waiver? Can I ask the director? Like, here's the deal. And I like the fact that VA is bringing a little bit of veteran self-accountability in here and saying, like, I accept a bit of that risk. I'm okay with that, VA. I really want this house. It's perfect for my family. And back to what you were alluding to, and John, I think it was Bryan, condos are more affordable in my areas of Massachusetts than single families. So VA is being parental to protect them. But what do parents do? Hey, you know what? Son, daughter, you want to go out there and do a little bit more? That's okay. We're going to let that happen because we still got to keep an eye on things. And this makes sense to us. So I think it's brilliant that you actually explain it in detail in that context, John. That's freaking perfect.
So real quick on the condo stuff, because I don't think people understand that, to your point, Rick, when you are declined, that there is another opportunity for maybe the veteran to kind of plead their case to VA
Right.
to get a one-time, exception on that specific deal or transaction. You know what I mean? I don't think people understand that. I think when they get the denial, they chalk it up and move on to something else.
Yes, well, that's the beauty of working with the SNO process. Just last week, I got a 75 unit, 55 plus deed restricted condominium that had 25 different master deed amendments, which I got all of them because I'm a nerd when it comes to that stuff. And I submitted to VA, and they approved that in 4 days. And then the week before that, I had a condo denied. Why was it denied? It was denied because of a leasing restriction. So all the parties were like, "Oh my God!" I said, "Listen, I knew it was going to be denied because I read the bylaws, rules, regs, whatever you want to call them." I said, "But listen, we've had great success with VA having the veterans send in their own SNO, their own request to VA, saying, 'Listen, Mr. VA, I appreciate you being parental with me, but as a 77-year-old Vietnam veteran who's not PCSing all over the country, and I'm not worried. I'm not going to rent my unit. I'm not going to lease it out. I understand. I'm an adult. I can read the rules and regulations. I accept this responsibility and accountability. Would you please let me buy it? VA within 3 days came back. Yep, you're good. Waiver granted. Closed next week, 2 weeks later, whatever it was. Those are stories I brag about all the time there's not enough of them being talked about, because that is just, it's parental. I love it. I freaking love parental. It's a great way to talk about VA.
Yeah, that's crazy, because now with this affordability issue, right? So with affordable housing being a big thing, condos are it, and a lot of these affordability tracks that these local counties are kind of earmarking out specifically for veterans or low to moderate income folks. All the condos have deed restrictions.
Do you know that in Massachusetts, we like every state, we have these affordable housing unit lotteries. We call them Chapter 40Bs or a Chapter 40R, which is a smart 40B, where they'll put deed restrictions inside the condos that you have to be under 80% AMI and blah, blah, blah. Do you know that most of the community development programs in the Commonwealth of Massachusetts specifically state in the application, VA not allowed? It's in the application, veterans not allowed. And I said, that's wrong, because I've done deed restricted properties in the past.
Yeah.
This particular time, John, I didn't go to snow. I'm sorry. I know I should have went to snow. I went right to the source. I called the valuation officer in Cleveland, and I said, Kyle, this is something I just need to get some legit guidance on. I apologize for the call. He goes, Rick, why would we say no to a deed restricted property that makes it affordable for the service member to buy a property and own a home with his family? He goes, we're okay with that, and we're okay with the foreclosure piece continuing forward. The issue is finding a lender that will do it. That was the problem, that it's the lender, right? We all know VA mitigates risk by the guarantee, 25%, but at the end of the day, it's the lender that lends the money. So they're allowed to say yes, or they're allowed to say no. But I've worked with lenders in the past that have been okay with that. But that's, again, I would guarantee it if you went to, you're in Missouri, Bryan, I would guarantee if you went to some of your community development programs and said, can I do a deed restricted property condo with VA? They'll probably say no. We've got to change the stigma that's out there, because VA most of the time wants to say yes.
Well, John, Rick's clearly passionate about the condo thing. Without
a doubt. Without a doubt. Look, for VA, we want a veteran to be able to purchase whatever home that they want to purchase, as long as it's affixed to the to the property, and we can comp it, right? So if we can do an appraisal and value that property, right, we want a veteran to be able to have the opportunity to compete and to submit a bid. And one of the things that I'm most proud about too is, do you know what the percentage of appraisals that are meeting or exceeding the sales price that are submitted?
I do.
Love to know that. What is it?
So 92.5% of the time. So over 92% of the time, when a sales price is X, our appraisal is meeting or exceeding that sales price. So let's get through that stigma first, right? So that's the one thing that we hear from realtors all the time, and I apologize, real estate agents as well, that we hear all the time is, oh, I don't want to use VA because I don't think this property is going to comp out.
Right.
But the data doesn't show that.
Right.
And that is one of the highest out of all loan programs out there. So
that's good. That's good. That's a good stat there, John. That's a great stat. I did not know that.
Oh my God. That is something that, again, very grateful. John was at the NAM event. John's staff was at the NAM event, gave some of those. I try to tell our realtor partners all the time, like, listen, VA does not have little gremlins that go out there and value the property in a different manner than non-VA appraisals. VA appraisers are non-VA appraisers. They're the same. Just the benefit of a VA appraiser is they have a high level of, I think, certification. They've got some education. They've been vetted by the Department of Veteran Affairs Loan Guarantee, and they do it the same way. There's not a different valuation model. And to John's point, a lot of our real estate community think that there is, and there's not. And that is a great statistic. And I'm so proud that VA is talking more about those wins, that data, because that is where data changes minds. And then, that's the reality of it. So I think it's awesome.
Well,
Bryan, I'll give you another stat. I'll give you another little nugget. So,
all right, I like this. I'm a data nerd. So
I'm a data nerd too. I'm a wicked data nerd.
So from an origination standpoint, if you start an application using a VA loan, do you know how many, what the percent of time that loan actually closes?
No, I do not.
No.
Start an application using a VA loan. Over 87% of the time, that loan's going to close.
Wow. What's it compared to the other GSC? Do we know that?
I do not get that number on a regular basis, but I will tell you the times that I have gotten it, a VA is trending higher.
Good.
Like quite a.
John, I got a question for you. I want to go back to the 92.5%
Sure.
for meeting value. I know you like to compare. Do you know what conventional is by chance?
They're in the 80s.
Yeah, see. Okay. See, I'm a big believer in data anyway, because I think data always tells the real story and it takes the emotion out of everything, because
it takes the ambiguity out of it. Data is data.
Right. So, I mean, you're talking about, and I also too think that our real estate community doesn't realize that VA appraisers are the same appraisers that do conventional and FHA like that. Like, I think people think that the VA appraisers that are out there are just specific to VA and they don't do other stuff. Like, it's
I just had this question last night. Right, I had it last night. I had 3 contracts come together last night, and the service member, I always have to talk to the realtors. Oh my God, it's VA. We got to talk to the mortgage. And so the realtor calls me up and I says, listen, she goes, well, Rick, it's a VA appraiser. How are they done? I'm like, have you ever had a non-VA appraisal done before, like conventional? She's like, oh yeah, I've had those, many of those. It's done the same way. You know this little designation called USPAP? Yeah, it's the Appraisal Foundation kind of oversees the USPAP guidelines that appraise properties. They're the same thing. It's just that VA's has an additional mandate on these appraisers. They have to protect the family of the veteran and the veteran themselves. So they're going to look for certain things. But you're telling me your property was built 3 years ago. Probably not going to have a problem.
No. John, you were talking about NPR waivers earlier. Do you mind if we go back and talk a little bit about that real quick?
Whatever you want to talk about, Bryan.
All right. So I know you talked about, well, 2 things. One, do you know how many, because I don't think people understand that they can actually do an NPR waiver, right? Like, I don't think that that the NPR waiver is a well-known thing in our industry as a whole. Because when I talk about it, it tends to be one of those situations where you can hear a pin drop in the room, right? Do you know statistically on NPR waivers, when you guys get those, do you know statistically how many of those you guys approve?
So here's what I do know. So this kind of answers your question, but not directly. And I'll get that data for you because we do track it, but through snow, which we brought up earlier. Let's talk about the ROV process a little bit. So
Sure.
ROV is a reconsideration of value. So if you're submitting a reconsideration of value, 54% of those ROV requests resulted in an increase in value. And
Wow.
the average amount that we have increased the value is 5%. So the veteran can ask for a reconsideration of value, and 54% of the time that, and remember, I already said that 92.5% resulted in meeting or exceeding sales price, and now I'm telling you submitted an ROV, 5% of. So
yeah, we're talking about a very small percentage, and now 54% of those actually get a increase in value. That's
so
impressive.
the point is, if you're using the appraisal as the reason why you're not utilizing VA for buying a property or allowing your veteran to compete from a to submit an offer, then you have completely missed the boat.
Well,
Like,
can I just add one more thing in there? This is the ultimate mic drop. Can we just talk about this? Tidewater. Tidewater mic drop, because that's got to be in this conversation of ROV. The fact that VA has Tidewater is the most amazing. Again, I wanted to drop in the mic drop of Tidewater on top of what John said, because if you're using the VA appraisal process or valuation as a reason to say, I don't want to do this, what other loan out there gives you 3 bites at the apple to defend the value of a subject property and keep this deal together? VA, you got the appraisal. Well, came in, do you have the Tidewater? Okay, well, then we're working on supporting value. And then next thing you know, we've got the ROV process, which John just shared. Oh, I don't know, 54% of the ROVs actually show an increase in value of 5%. Why would you not, as a real estate professional, take a VA? And when I teach realtors, I say, listen, let me ask you a question. Program A or Program B? Program A gives you 1 chance for your value on your property, and Program B gives you 3 chances on your value of your property. Which one do you want? 99.99998% of the time, it's I want option B with 3 options. I go, then why do you dislike VA? And they all kind of just get a little quiet and muddly. And I'm like, and can we have a conversation about how amazing VA is?
You've got, again, so for those of you that do not know the Tidewater process is at the beginning, right? So before you even get value, your appraiser is going to reach out and they're going to say, you got 2 business days because there is something about this price that I'm having trouble understanding. And so this is your chance to provide me your most valuable comps, right? To make sure that I am considering all available comparable properties at this, to give you the value that you need. Then you got the value comes in 92.5% of the time, it's meeting or exceeding. And then on top of that, you got an ROV process that says, oh, wait, it fell out of that. We're going to challenge it. And we're telling you that 54% of the time that resulted in an increase. I don't know how many other bites at the apple that you need, but
I mean, that's clearly the house was just not priced right. I mean, at that point, right? I mean, let's call a spade,
yeah, and then what you're talking about is the veteran can still purchase the property. We're not saying the veteran can't purchase the property. They just have to bring the difference of the value versus the loan amount.
I had a Tidewater just about 2 months ago work. The appraiser called Tidewater. I told the agents, this realtor, long story short, she wrote up a narrative like it was a dissertation for a PhD, completely supported that value. She sent it in to I swear to God, she sent it into now, so we get the Tidewater. We know that they have questions of value. The buyer's agent and the listing agent work combined, provide these comparables to the appraiser. Holy mother of God, it comes in the next day at value. I had to tell this agent, her name was Michelle Perriot. I said, you wrote one of the most impressive rebuttals or supporting narratives for value I've seen in 23 years. But that kept the deal together. That's a win. I tell everybody all the time. That just happened a few months ago.
Yeah, that's impressive. And I think that's why, if you look at the 92.5%, John, when you say that, I mean, Tidewater obviously helps that. The Tidewater process is one of the big factors in why the VA, tracks at a 92.5, while the other programs are significantly lower. I mean, it has to be, right?
Without a doubt.
Oh yeah.
And Bryan,
100%.
can we change to customer experience just a little bit here?
Yeah, absolutely.
Oh yeah, 100%.
Because I want to give you some other stats on customer experience.
Yep.
Customer experience could mean veteran, or it could mean our stakeholders that are providing the benefit to our veterans, right? So we established a basically they're called ServiceNow tickets about 3 months ago, 3 to 4 months. And when we did that because we saw volume continuing to increase, but we also saw staffing not. So we needed a way to continue to, well, first of all, VA is the only program out there where their subject matter experts actually answer the phones. So it's not a call center when you call in. It is our subject matter experts that are answering that phone. They're answering phones in less than 1 minute right now.
Wow.
They're able to do that because we have ServiceNow tickets that we've received 92,000 requests in FY25. So that means in the last 5 to 6 months, we have received more than 92,000 tickets. 90% of those tickets are resolved within 3 business days. The average time is less than 3 business days. We then take those topics that we get off of that ServiceNow ticket that we're not able to do by using the phone, and we're able to understand, do we need training? Do we need enforcement? Or do we need policy to change? So we're trying to, and we're going to continue to up our game with that. We are looking at ways to use AI, looking at ways to use chatbots as you are reaching out to VA, so that we are there and ready and can really understand the needs of our customer base, whether or not, again, it's a stakeholder that is providing the benefit, meaning an originator, a servicer, a lender, or most importantly, the veteran themselves that are buying and purchasing that home or refinancing that home.
John, I don't think, and you and I have talked about this, and I have championed snow, even though you probably don't think I do. That's an inside
I'm in the same category as Bryan.
Inside joke there.
You might not think I do, but I have.
But I do. But I don't think the industry understands that that's also how you escalate too, right? Like if you're having an issue and they do arise, right, where SLAs aren't being, or implied SLAs aren't being met, that you can use the ServiceNow, snow ticket process to escalate something.
Yeah, without a doubt. No, that is how we want you to, because in that same time frame, we've answered 293,000 calls.
Oh, wow.
And answering 293,000 calls, we're answering them in 39 seconds with our subject matter experts. So when people talk about VA and they talk about it negatively, I take it kind of personal. You know why? Yeah. Because the staff that we have are amazing. They are mission focused. They are answering phone calls. They are writing policy. They are looking at individual loans and trying to improve a veteran's life. And they take personally, just like I do, this program and what it means to our veterans, as I know that you all do as well. So we're all in this together. I'm asking you to help us help you. And that's utilize the processes that we have out there. And if we need to improve the processes, that's how we know how to improve them, because we see those stats and monitor those stats on a daily basis.
All right. So, John, really appreciate your insights on the snow ticket process. And I promise you in the future that both Rick and I will do better with snow.
I'm doing good right now.
Again, help me help you. That's
I love it. I love it. And it's and it is, and to be frankly honest, it's kind of like a magic button, because there's been plenty of times where I've had to use it, and the responses have been timely, accurate, and very helpful. So whoever's working those boxes, please send them a high five for me. And eventually Rick, when he starts actually using it. So, so here we go. So, John, I think what would be a great, I think what would be a great opportunity here is, let's talk about loan guarantee, kind of the future outlook, and things like that.
Yeah, one thing that we didn't talk about, or that we haven't mentioned yet, is we're trying to be a little more aggressive in the training standpoint, and really get information out more quickly, and honestly in a usable form. Like, go back 5 years ago, 7 years ago, we put out like this 150-page purchase guide. Like, no one wants to read a 150-page user guide, right?
Nope.
So, like, come on. So we're getting smarter about how we're delivering technology and how we're delivering information through our website, through different channels. Last year, at the end of last year, we put out the real estate toolkit. We've gotten tremendous response from from that those documents, and those are like quick reference guides for real estate agents that they can use in support of the program. We'll continue to update that. The next one for 2025 is going to be a veteran tool, to kind of give them information on how to, what to look for when purchasing a home, what questions to ask in a refinance situation, kind of like little helpful hints, little short vignettes on, how to get information quicker. We'll continue to do that for our lenders, for our appraisers, servicers, as we continue to grow. So exciting things on the informational training front. Technology. Again, we've already talked a little bit about data and how to use data and use performance benchmarking. Where look, we just want our lenders and our servicers to become smarter, right? On not only what is in the marketplace, but how they're performing against the marketplace, so that they can provide better opportunities for veterans to get into the program and utilize the program. So we'll continue to do that. And then just working with our lenders and servicers, appraisers, veterans, to improve the process, to continue to be a product of choice for our veterans moving forward. So a lot of change in that arena. I don't think we'll see, probably in the short term here, huge policy changes and those kind of things. We're going to focus on procedural. We'll focus on automation. We'll focus on data and delivery. Let lenders be lenders. Let servicers be servicers, and provide information to them, so that they and for veterans, so that they can become smarter in how to utilize the program.
John, one of the things that I'm not sure if many people get an opportunity to look at this, but the lender scorecards that you guys give, the data on that I've used in training materials since like 2017. The data in there that talks about, number one, how you as a lender perform against the national averages of VA, how that looks, which is always kind of, I think, a key indicator. And then number two, which I found very helpful in busting myths in the marketplace, was the demographics and the credit scores and the asset averages for both nationally that you guys guarantee. I mean, that's when I realized, I'm like, wait a minute. The average FICO score for a veteran, I think even in 17, was over 700. And
look, we talked earlier, right? We've closed already over 281,000 loans this year. And out of those 280,000, we're talking about 107 billion. So, in that, if you look at the demographics of that, 718 average credit score.
That's crazy.
Debt to income ratio is 43%. Veterans exempt from paying funding fees, 62.5%. Veteran down payments, almost 15% of veterans are actually putting a down payment down to purchase a home. First-time home buyers, check this stat out. First-time home buyers, how many of the VA program purchase VA program do you think are first-time home buyers?
25%.
40%.
Wow.
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 40%. It's amazing. You know, I love that stat. Average loan amount is getting closer to 400,000, 387,000. You know, we talk about home affordability, but Bryan, to your point, what we're doing is we're benchmarking that. Those are the national averages, right? We're benchmarking each lender, and we have 1,500 lenders that participate in this program. Around 1,500 lenders, we're benchmarking them against those metrics.
Yep.
And we're saying, what I do when I go out and I talk to a lender, I say, look, you've got X, the company over here that has some type of limiter that they aren't that they aren't doing. Let's say a reserve requirement. They have this reserve requirement of anything over 250, 300,000. You have to have, let's say, 6 months reserves. The amount of business that they're losing out on, that's what we're trying to track, right? So we're trying to make the point to credit the credit officers of, look, this is what you're giving up. And conversely, by giving that up, the quality is would show that you're going to have the same quality in your portfolio if you do it, rather than not do it.
Right.
So why not just allow it? You know, why not allow your originators to originate those type of loans, because you're just losing out on business at that point. So you know, we're trying to help in that as we're getting closer, as we go ahead and get closer to 100% in those reviews. That data is really going to be telling across the landscape as what the differences are, and how every lender and you know, an investor, you know, has their portfolio.
You actually have lenders that put reserve requirements on VA loans when the actual loan amount's over X?
Well, we won't call them lenders, because when we go to lenders, they're called investors.
Okay. I got you. Just curious. You know, like,
hey, you've been using air quotes, by the way, so you know
I love air quotes.
You know you need to move on, Rick.
I just got one question for John regarding automation, because he and I talked about this a few years back. Is how close are we to our own VA AUS system? Because it kind of burns my butt that we have to use a couple other AUS systems that aren't really VAs. Is that something that's in the pipeline for you guys in the next, say, 2 to 5, 7 years?
I will tell you this, Rick. I think it's a great question, and I think that we're at this point now where we're asking the question, what is an AUS? Because if an AUS are just rules that runs through a loan origination system, does it really have to be its own thing, right? Aren't they just rule sets? And from those rule sets, what's the data that's driving that behavior and the rules that drive it? So I think we're more interested in, from a data perspective and analytics perspective, in solving that part of the puzzle than actually going out and just building an AUS. But
good point.
You know, we're exploring all those options. I've just been really focused on building out the data infrastructure to support the data that we're about to get. This year, it looks like we're going to move into the let's get the data, right? So moving it to that 100% review process,
Right.
and then from there, that'll tell us what rules we need to put in place and how we need to put them in place in the LOS systems that lenders use. And so we're working with those LOS companies now.
Yeah, I was going to say that's great. Once you have the data, you can go walk across the street and give it to our partners over there and say, hey, listen, this is what we would love to have the rules be in your system. They're going to be VA rules. And, we like these types of loans based on the data that we've obtained over our 2, 3, 4 years of aggregation of data. So that's great. I love that idea.
Yeah, let's say, look, let's say you use DU or an LP, right? And they make a rule change depending upon what their portfolio needs are, right? So they have different authorities. They have a different reason to exist than we do, right? We're a benefit program. Even though we perform relatively the same, especially in default and that kind of space, let's say they make a change to their AUS, and that AUS directly reflects, let's say, 10% or 20% or whatever, fewer VA borrowers would get into loans because they made some decision. We've got to get away from that. We've got to control our own destiny. We've got to do things for the right reasons in the right way. And then we have to. So that's what we're focused on.
Love it. Love it.
Well,
should be focused on. Let me put it that way. That's what we should be focused on.
Well, I think once you start getting 100% reviews, and I'm a data nerd, so I always say the data doesn't lie, right? And it always can show you where your deltas are to get better. And I think when other, we'll just say, investors or stakeholders, look and see that other organizations are executing at a higher level on certain things, why wouldn't we do that, right? Like, we know the performance of VA loans trends better than the other programs for sure. So I just think it's the accountability, buddy, on data. My question to you and to VA in general, as a person that's interested in the data, when you guys get all this types of data, is there a way for us to, request data to, not maybe, we won't say names, but just national stats on all the stuff that you guys are tracking to see where we're at internally?
Yeah, the goal is for us to publish some type of spec for you to be able to get, and I'm calling it a spec because that's the technical term of what I'm talking about. So there will be some type of publicly available data from the data that we receive that you'll get right in your systems. That's the hope. That's why we're using API as the way to, which is short for application program interface. And so we're using those APIs because we can talk back and forth. The computer systems can talk back and forth and send that information back and forth. So that's the hope.
Okay. Well, I love that. And the scorecard is always helpful. So hopefully we can maybe.
I wish we had scorecards for a little broker like me. We don't have scorecards for little guys like myself yet.
Oh, you will, Rick. You will. You will.
I think Rick should get a scorecard.
Go down to the originator.
You're going to go down to the originator level?
That's awesome. That's there we go. That's good.
There's a reason for that little NMLS number you have. There's a reason for that.
I love that. That's awesome.
I love that. That is awesome stuff.
And to all the folks who think that they're doing good, this is where your report card comes back and you're like, man, I not as good as I thought I was, or maybe you're better than you thought, which is good.
Yeah, exactly.
So, all right.
Self-accountability makes us all better at what we do.
100%.
Look, data tell the story of quality, right? Data tell the story of the type of business that you are putting on the books. The story it won't tell is, from a number standpoint, why you're achieving the numbers that you're achieving, right? So we're going to give you information that will tell you, benchmark you against others, right?
Mm.
And then the where lenders are going to come in is what makes them better. Like how do you raise that bar, and where should that bar be set?
Yep. I love that. All right, gents. Well, we're on the back nine. Actually, we're on probably the last couple of holes of this round of golf here. So
we're on the 18th, actually.
Let's do I think we are. So let's do a little fun game called VA Loan True or False. Okay.
Oh,
all right. So some of these questions.
Always gets 100 on this.
Yeah.
Always gets 100.
Hey, listen. Luckily, we didn't do questions from the military community, which the next time we get together, I will have those.
That would be yours.
Yes. Okay. Here we go. So first one, VA loans take forever to close. True or false?
False.
False.
Right. Okay.
False.
Not only that, I'll put some numbers to it. VA loans take less than 30 days to close. So right now they're at around 29 days. That is, if you look at the other loan programs on average across the country. Now, that's all loans, right? So that's refinances, cash outs, every loan, 29 days.
That's awesome.
If you go to a purchase, we've got a lot of lenders out there that are closing loans in 10 to 14 days because our appraisals are coming back in less than 7. So, it's just not true.
All right, my true false, Brian.
Go ahead.
A veteran can't pay more than the value of a home in a purchase. The VA amendatory clause prevents that.
False.
False.
Okay.
No, there is nothing in our guidelines to say a veteran cannot pay over whatever the value is. The veteran wants a home, go buy the home. Right? I mean, like we'll go to 100%. And if you want to pay 150% for something, more power to you. You just got to bring in the difference.
Love it.
Rick, I think there's a VA circular that even outlines the fact that a veteran can pay beyond the purchase price, right?
I don't think there was a circular that highlighted.
Sure.
I don't know. I'd have to check.
Not to put you on the spot, but I thought for sure you would. You're the guy on that. Okay.
I don't know. Maybe that'd be a really cool way.
Our handbook does reference it, right? It basically, says what I just said, right? That if anything over the value of the home minus the purchase price, you would pay the veteran can pay the difference.
Yep.
All right.
All the mandatory clauses for is basically it is for a protection for our veterans that at some point in time, if there is something that is not disclosed, if there's something that is different from what they thought they were buying, they have a chance to get out.
The old
explain that to some of the attorneys in my state.
Yeah. All right, here we go. You can't buy a condo with a VA loan. True or false?
False.
If that was so, my life would be a whole lot easier because I would not be. I personally have to approve every waiver and every exception and every condo. So my life would be a whole lot easier if that was the case.
So that's false, by the way.
That's false.
Okay. All right,
I love the fact that John's approving my waivers because I've sent in a few recently. Thank you, John. Appreciate it.
Oh, it's not me. It's staff that puts together a great package with your realtors and the lenders and you, Rick, that allow for that to happen, as well as the veteran putting together the waiver. I
got another condo being submitted to WebLGY this afternoon. Beautiful 3-unit. Thank you.
Hey, Rick,
I wish
let's
I could
not,
take credit, but we've got a great staff here that puts all that together.
You guys are the
Rick,
best.
let's not use our platform for personal reasons, okay, buddy? Let's.
No, not personal. I'm just thanking these guys. They're doing a kick butt job, man.
Well done, sir.
Yeah.
Hey, just
Okay.
keep him focused, Brian. Oh, you got to focus him on one or two things, right? Keep him focused on service now.
I mean,
right?
I got notes and stuff to ask John. I know what I'm doing. I'm good.
okay.
So my true
Well,
fault. My true
you
fault.
didn't get the agenda, so I was a little concerned. Yeah.
It's my true fault.
All right.
All
All
right,
right.
Brian.
You ready?
So,
You
would you
got one?
please stop interrupting me? I'm ready.
Okay. I was making sure
Okay.
you had one.
Veteran is not in a purchase transaction. The veteran is not allowed to pay for repairs identified in the appraisal.
A veteran is not allowed to pay for repairs inside a transaction. What do you think?
I would say that's false, but it's not something that we would endorse them to do, because in the event that they don't buy the house, it would be a problem, right?
That is correct.
Well, thank you. I appreciate that. At least I'm going to be right on something.
What we care most about is to make sure that those repairs are done before closing happens,
Yep.
or if they are not, that they are at least a funding condition, and are not going to be a safety, sanitary, security type issue for the veteran.
Right.
Because remember, look, and Brian, I think you brought this up earlier, right? It's like the VA program is not just for veterans; it's also for our active duty service members that are out there. And what if they're forward deployed? The last thing we want to do is put a spouse in a situation that is not safe and sanitary. We need and want that active duty service member to focus on the mission, not worried about whether or not the house is going to fall down or not.
Good point.
That's a great point. Okay, our last one, and this is this is a doozy, because I want to get everybody an opportunity to opine on this before we head out today. All right, last one. VA loans are harder to get accepted in competitive markets.
True. In my market.
VA, can you repeat that one more time for me?
VA loans are harder to get accepted in competitive markets.
Only because misperceptions. If you break down those barriers and people actually look at the data, then that should not be the case.
I agree.
I agree. I agree. I believe that they're rejected out of myth, not on merit.
That's 100%. It's myth in Massachusetts. It's very, very much myth, not merit. And we see it all the time. The biggest thing that we see, which I think kills a lot of the transactions, is the misuse of terminology by the realtor community, where they use deposit and down payment interchangeably as the same thing, and that's not factual. And so when they're not using the proper terminology in a transaction, then the seller has no idea. The seller therefore makes a decision based on inaccurate information. That's what we see a lot in Massachusetts and Southern New Hampshire, Southern Maine.
What's the old saying that we used to say? It's not your father's VA anymore. It's not your grandfather's VA anymore.
Yeah,
right.
It's not. Unfortunately,
we've completely changed,
yep.
and we've changed for the better. And that's why we are 14% market share versus less than 1% market share.
Still got a lot of work to do, guys. We still got a lot of work to do. But
I'm up. Let's go.
But
I'm up for it.
But we got good people working hard on it. So, all right, guys. Well, that's unfortunate, but our time is up, and this has been an awesome conversation, and I look forward to doing this again. I do have plenty of true and false for the next time we get together, but I figured that was a perfect one to end on. So, anybody got any last words of encouragement to our audience?
If you're not selling VA, then you're missing out, because it is the best loan product out there.
I need all the loan originators watching this to go out there and put more heroes in more homes. That's what I say all the time.
All right, gentlemen. Well, that's it. And this has been another great episode of Homeownership Heroes. And I'm your host, Bryan Bergjans.
And I'm Rick Bettencourt.
And then our guest today is John Bell. Thank you, John, for coming. And we look forward to our next episode. You guys have a great day.
Hey, guys.